All right, guys, another day of selling in the stock market. We're down about 3 out of the last 4 days on the S&P 500 off of the highs. And one of the most interesting things probably is the struggle with the 4,700 level on the S&P 500. And I'll go ahead and jump right into it right now. We have this 4,700 level that is consistently being tested. I think we've tested it about like 13 or 14 times going back to the beginning of November, right? And it's this one line right here: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 13 times. And it continues to reject price. You don't find it very often where price will be rejected that many times and still hovers at the all-time highs, but we're really not that far off. We're a couple percentage points off of the all-time highs. And despite all the rejections, price is still kind of hanging in there. Now, the big thing going into tomorrow is the FOMC statement, right? The Federal Reserve, they release it every 6 weeks on a Wednesday at 2 p.m., followed by a presser at 2:30. I really hate those pressers. I think they don't really add anything to us as traders and investors. It does nothing but add more volatility to the day. It almost makes it almost impossible to trade because you don't know how long Jay Powell is going to talk during these pressers. And so now that he's already got chosen to head the Federal Reserve for another term, he's got a lot of liberty now, I guess, if he really wants to actually start curbing in some of the purchasing of assets, raising interest rates. And I think tomorrow is going to be really interesting because you have like the PPI that came out today, came in at 9.6%, a lot hotter than what anybody was expecting. And the hottest on record, in fact, since they started doing this back in 2010. You have to wonder, is the Fed, because he dropped the word transitory in the last FOMC statement, you have to wonder, is he going to actually start tapering a little bit faster than what we even expected going into tomorrow's meeting? Could he actually raise interest rates at the beginning of next year, maybe even at the next meeting? Those are some of the things that I would love to hear. I don't expect him to raise rates tomorrow. I think nobody's expecting that. And I think if he did do it tomorrow, I think it would send shockwaves through the whole financial system. Plus, he has a history of trying to forecast his moves at least one meeting in advance, if not sometimes years in advance. Now, it doesn't always mean he's actually going to stick to that schedule. If you remember, he was saying it wasn't going to be until like 2023 that he wouldn't even thinking about raising interest rates. And here we are at the end of 2021 talking about raising interest rates in early 2022. So that's going to be interesting to see tomorrow. So we're hitting this 4,700. What you're continuing to see, though, is the dip buyers wanting to get back into this market. Maybe it's because there's the Tina effect. There's no other really option. There's no other opportunity for traders to be able to jump into. But the S&P 500, and you saw it again today when you pull up the SPY, they tried to rally the market right there into the close, almost back up to green before a little bit of selling into the close. I'll pull up the 5-minute chart here. You had a nice base, broke out of that base, and then it was off to the races. And you can even see here, if you zoom in enough, you can see the 5-minute volume actually picked up pretty well. As soon as this big candle here formed, it was heavy buying the rest of the day. So I think you'll see a little bit of activity in the morning. Usually in the past, the FOMC statement has usually seen quiet volume early on in the day. But of late, though, we've actually seen some pretty good price movements, people trying to get ahead of the FOMC statement before it actually comes out, for better or for worse. A couple of things that we need to be looking at. We're still in this rising channel. We got price level support right here. So we get a big sell-off tomorrow, and FOMC statements can often lend themselves to some pretty heavy selling. If we get a sell-off tomorrow, do we break this price level here at around 454? Let's just say 454. Does it break that level there and create what kind of is like a triple top in the market? You have your first top, your second top, and your third top. You don't really see that too much on the indices, but you could get one right here. And if that breaks, then what automatically comes back into play is these December lows. I think these are going to be very hard to break because I think a lot of people are going to be targeting these December lows as an opportunity to load back up, to the long side. So it could happen right here, which would be the lows from December 3rd, or it could happen right here, which would be the lows from December 1st. You have actually like 2 days. So I would say probably watch this level right here, the lows from December 1st and December 2nd. If you break below those lows and then you close below them, that becomes quite significant. Now, what's also interesting, though, is how those lows are starting to converge with this rising trend line here. So this rising trend line, these lows could offer some decent support in the coming days and weeks if we get some more heavy selling. But the other thing, too, I would suggest, yes, the last 2 days we've seen above average selling, just barely, right here. But you need a lot of selling to keep this market down. You need selling, like for instance, today, 95.4 million shares traded. But you need more like these kinds of days where you're like in 130 and 140 million shares to really get selling to the downside. Otherwise, the lighter the volume, the less likely that these sell-offs will hold. And I know I'm coming from a more of a bearish perspective, and it's not because I'm a perma bear. I've traded this market primarily long all year long, but I also realize too that this market needs a breather. It needs to sell off some, and we're seeing a lot of declines under the surface. And I'm trying not to sneeze here, but I can feel one coming on. But we're trying not to. The indices don't want to sell off, and when you look at the erosion under the surface with like the T2107, where we're hitting 36% of stocks trading above their 200-day moving average. I mean, 64% of stocks are trading below their moving average despite, and at that point, historically, you start reaching these numbers, the S&P's well below their 200-day moving average as well. S&P 500 would almost take a massive correction at this point, another 10% to the downside, maybe a little bit less, like 8 to 10% to the downside to even test the 200-day moving average on SPY. But yet 64% of stocks are trading below their 200-day moving average. On the T2108, which is the percentage of stocks trading above their 40-day moving average, it's even worse. It's 77% of stocks are trading below their 40-day moving average. But now if you look at the S&P 500, for instance, I have the 50-day here. We're not even close to testing the 50-day moving average. We would need another 50 points to the downside before we even could say we're testing it at this point. So there's the story that the S&P 500 and the NASDAQ 100 shows, and then there's everything else. And everything else is doing pretty poor, and that's reflected in the Russell 2000, where it's traded sideways all year long. And don't forget, too, post some of your questions, stocks that you want me to look at. Love to hear what you guys are looking at as well, and anything that you want me to take a stab at, I'll be more than happy to go over with you guys. Just post it in the comment section. I see them all, whether you're on Facebook, Twitter, or on YouTube. So make sure to keep posting them. Some of you guys have already done so. Russell 2000, sideways channel that we just mentioned. But what's also starting to become a little bit intriguing is this short-term declining trend line that's pushing price lower. And you had a test today, and this is the 6th time that it's tested this support level. And it held once again. So tomorrow becomes another do or die moment, and it's probably going to hinge on what does the FOMC statement say? What does Jerome Powell say? What are they going to do about interest rates, tapering, and such? How does that affect not only the NASDAQ and the S&P 500, but how does it affect the Russell? Do we see like a flight into the Russell 2000 as a result of something that's said that the market doesn't like, that affects negatively the big tech stocks and the S&P 500 and large caps? You could see that tomorrow. If this breaks, though, first of all, any dead cat bounce, this declining trend line becomes basically, the point of resistance that you want to watch. But support levels, there's not a ton underneath here, because it had this epic run from November of last year all the way until about January, February of this year. Hardly look back. So you're almost just looking at small price levels here, like right there. And right there is your support levels. There's not a lot outside of that. You could also say, hey, maybe this support level here might actually come into play. That might be one of your better ones. I'm actually just seeing that as I'm talking to you guys live here. That could be your support level that the market hangs on to on any pullback. But still, that's another 6-7% to the downside from where it currently is trading at. So all things that you want to be watching for going forward. Is this trend line still in play? No, this trend line was broken a long time ago. Qs. Keep posting them, folks. I'll take a look at every one of them, okay? If it takes 50 minutes or an hour or whatever to go through your charts, I'll be sure to do them. The Qs. Still got the rising channel in place. This resistance is continuing to menace the markets here. And I need to straighten this one up a little bit here. It's gone a little bit away from me. There we go. Head and shoulders pattern, left shoulder, head. Now, for a while, we were talking about that being your right shoulder, and then it broke down. But you couldn't even make an argument that this is your right shoulder now that it's formed, that this was just all part of the head pattern of this head and shoulders pattern. It does kind of dilapidate the pattern a little bit there. I hate looking at necklines that are at a steep declining angle, but that could be very much what we're dealing with there as a head and shoulders pattern. For now, though, there is definitely some notable support, even though it's broken it on a couple occasions here of late. But that definitely seems to be a support resistance level right there to watch going forward. We're also testing this 50-day moving average. And we held it so far today. So held the 50-day moving average, bounced off of it. You can see that's where we went back down to previously on the sell-off from the Omicron. And the NASDAQ doesn't have a huge history with the 50-day moving average. It's more with the S&P 500 that has the constant bounce off of the 50-day moving average like what we saw with Omicron. It wasn't a clean bounce, but it did bounce. The only time it didn't was this nasty sell-off back in September and early October. Eventually recovered it, but it did cause it some problems for a little while there. But other than that, you have one here, again in July, June, and twice in May. So I could keep going back even further before that, March, February, January. You get the point. Now the Apple update, because we probably should talk about that a little bit as well. This is the one that a lot of people continue to flock to during these market sell-offs. Today was down 0.8%. What was the SPY down? 0.7%. So it actually was much weaker than the broader market. And so that's where, when you look at the NASDAQ 100, it has more of an influence on the NASDAQ 100 than it does on the S&P 500, even though it has big influences on both. So in any case, NASDAQ or Apple, very parabolic here. We don't want to see it be this parabolic. Because what's going to happen, it's a $3 trillion company, huge market cap. You take something like Microsoft today, which was down significantly as well, and you start getting both of these things selling off simultaneously, you're going to have moves like what we saw yesterday and what we saw with the Omicron sell-off. You're going to get these big moves out of the market that are very difficult for anything to survive. And that's going to include probably your small caps too. You get the big tech cap sell-off, maybe you get a little bit of a flight to the small caps as safety, but ultimately I think those will probably take a hit too. Just like when you see in your typical sell-offs, a lot of people will run to the utilities and to the staples. They'll do that for a short period of time, and then everything just falls right apart. So Apple, on any pullback, watch this 162 level. That's going to be its breakout support. It would be a retest. Does it bounce off of that? If it doesn't, well, let's just see here. You have some trend lines there intact, but there's just, I don't know. Probably looking at something around in this area here, maybe like a pullback down into the 140s, high 140s. All right, let's look at some of your questions here. I've been talking enough here. Let's look at some of the things that you guys have and keep posting them. Good afternoon to you, Daniel, and to you, Victor, as well, who's also, I guess it's like midnight where he's at in over in Europe. Let's look at Neo. Now we'll fix this a little bit here. You have a look at NEO. All right, so there was a huge EV hype for a while there. You had it with Lucid, you had this big pump, you had it with Tesla, big move as well. NEO, on the other hand, didn't benefit from it as much. Yeah, it had a little bit of a move, like 33 to 43. That was significant, but it was nothing like the hype in some of these other ones, like with Tesla and Lucid. Nonetheless, you got a little bit of what appears to be like a head and shoulders pattern. You got like a left shoulder there, you got a head, and then you got a right shoulder. Now, originally I was saying, hey, watch this potential inverse head and shoulder pattern in a much shorter time frame. You got a left shoulder here, head, and then a right shoulder, but it never confirmed. Never closed above this neckline here. Instead, it got right up to it, sold off on multiple occasions, and then it finally fell apart. So now it brings us to a much bigger pattern. We can go ahead and take that neckline off because it's irrelevant at this point. Major support level, and it's broken it. And you got what looked like a bit of a bear flag pattern there. Let's see if it'll let me draw it here. There we go. So you had this bear flag, and it broke out of it today, broke below the support level. And so then you have to start asking yourself, okay, where's the next support level is going to lie? Because it's probably, for me, I hate making, like crazy predictions. That's not really what I like to do, but there's not a lot of support until you get to this like 21 level. And it was so long ago, I don't know if it'll really even remember it all that much, because it's not like it's tested it, right? I mean, look, you go back to October, and that was of last year. That was really the last time it tested it. So there's some support at that area there. But outside of that, I don't know, guys. I mean, it's kind of maybe it's sitting on just these lows from the lows of May. Maybe it can find some support there, because it did do that earlier this month with this candle right there. So it's a tricky stock. This would scare me a lot. If I'm long on it, I would be scared to remain long on it, just because there's not a lot of support underneath. You got a declining trend line that's also intact. You could say this is even a descending triangle pattern, a massive long-term descending triangle pattern with lower highs all along the way. Even though it didn't necessarily make lower lows, it made lower highs, and then finally broke it to the downside, creating its first lower low. Rage TV asks how I'm doing, and doing great. Also wants to know about BBIG. So another one, this is stock that people flocked to back in August, September, going from $2 all the way up to $12. People with big hopes on it, and then as it would fall down, people would buy it. You'd get the I don't know what you would call it, like a little dead cat bounce, compensation bounce, where you just get a little bit of a bounce, sucks a lot of people back in, thinking that, okay, it's going to go from here all the way back up to here, and then all the way up to $15, $20, and it doesn't. It sucks more people in, and it just goes even lower. This is why, too, and I'll bring it up knowing that I bring it up on every one of these live streams. Stop losses are important. They protect you from yourself. If I didn't use stop losses, I would be a mess. I really would, because there's been some really bad stock picks that I've had. Stocks that I think, okay, this stock is going to go up. And you want to know what? It doesn't. There was just one probably about a month ago with Tilray. I said, okay, look at this. Nice little basing pattern, right? And I'll pull it up for you guys real quick. And don't worry, I'll come back to BBIG, but I just want to make this point here. And I think I might have made this point in a previous one as well. Double bottom here. Looked like it was a base coming out. Broke out. I was happy. I was up like 4%. Immediately sold off the next day. Had a news piece hit it. I got out right here at 1207. It's trading at 8 now. That's a 33% loss that I avoided. Even though I took a small loss on it, I didn't take a 30+% loss on it. And that's what you got to avoid in trade, because just like Tilray here, there's some really bad trades that you will find yourself in, and you're going to say, thank God I use stop losses. Now, there's also going to be times where you get stopped out and you see the stock go right back up to all-time highs. And the only thing that will do is embolden you not to respect your stop losses in the future, which will add to your losses that you've already experienced in the past. So you have to be very disciplined about it. You got to be dogmatic about it. It's like, look, no matter what I think, no matter if I think this thing is just going to flush the longs out and go right back up, you can't use that as a reason for not staying disciplined to your approach in trading. So back to BBIG. It was just a good chart to explain it because there's a lot of bag holders on this chart, and it doesn't hurt for me to always bring that discipline back into play. So somewhat of a trend line. It goes all the way back to the beginning of the year, maybe a little bit to the first day of the year, actually. And bounce, pulled right back. Essentially, you had a little bit of a break right here. That's what's kind of giving me a little bit of indigestion. But it's kind of like settling around this basing pattern. If it breaks below it, let's say if it breaks below the recent lows, like at 238, I don't want to be in it. If it stays above it, then it has the potential to bounce. But you got to remember, though, there's a lot of people that are trapped in this that are looking to bounce. So if it does bounce, and a lot of people are just going to be looking to get out at break even, just wanting to get out. The people who have been buying in here, they're not looking at trying to get out up here anymore. They're just looking to try to get out with some of their money. So I think there's going to always be this continued pressure on the stock to sell. And you got a declining trend line here off of the all-time highs. Is that all-time highs? Yeah. Oh, no, we go back to 2018. Is that no, it's not the all-time highs. September was the all-time highs. But you're going to see that there's this declining trend line that's going to add some additional pressure going forward. Yeah, and Rage says that he's been getting, beat down hard from not using the stop losses. Look, we've all been there, man. We have. It's tough. Nobody likes to take a loss of any kind, but it's better to take a loss that's small and manageable than to take a loss that's just going to destroy your confidence and deplete your funds. I have losses all the time, man. And the one thing that helps me stay in the game is that I make my losses small. And the other thing too is always assume that your trades are going to lose. Always assume that. I know people don't want to sell a YouTube channel on the premise of assuming that your trades are always going to lose, but I always assume that all my trades are going to lose because I know that the potential for that happening is out there. Once I get in, I don't know if the stock is 100% going to go up or go down. I have to wait and see, and if it doesn't go my way, I have to have that trade planned out before I ever get in to know, hey, this is the time to, I planned it out this way that if it crossed this barrier, I'm getting out. And you always use support and resistance levels for defining that support. The one thing that concerns me a little bit if I was to trade this BBIG is that the stop loss is a little bit too long. I mean, and you're going to get that with these stocks that are trading below $10 a lot. Stop loss below 238, it's trading at 295. You're talking about a massive loss if that were to hit. I don't want to take a 30% loss. So I have to go and move on to a different kind of a trade. But that's really the support there on the stock is below this price level here or below the lows from December 6th. And if you're seeing a little bit of like where my face is freezing or anything, let me know because I've actually noticed that in a few of my videos. Not sure what's causing it. There's a lot of bells and whistles at work here, so I'm trying to get to the root cause of that. So I appreciate any feedback you might have there. All right. G Unit Beans, man. He's asking about net on the short side. Well, let's pull up net. Incredible chart. If you're net short, get that net short on NET. Rising trend line. Pulling back to that rising trend line. So you want to watch for a potential bounce here because this is a trend line that goes back to May. It's tested it once before. Now it's testing it again. It tried to sneak below it, couldn't hold it into the close. So now it's just sitting right on top of it. It sets up as a potential bounce off of oversold conditions. I mean, whether you're looking at the MACD or the stochastics, even a little bit with the RSI, all oversold. So there's a potential for a bounce here. All I'm saying right now is I would be very much looking for a way to tighten my stop some so that if that dead cat bounce does happen, I don't get slaughtered and lose my profits, that I can go ahead and, leave the trade peacefully with profits in hand. It doesn't also hurt here, since this is a significant support level, to maybe take some profits off of the table and not just tighten up the stop losses also. So trying to see if there's any other support levels to be concerned with or to watch. Kind of one right there, though. It's not what I would necessarily call a clean support level. Let's see here. So if this trend line does bounce, then maybe your next target's going to be around 113, 114 per share. Good looking chart, though. I think it's definitely a stock that you want to be concerned with as a bounce play if you're short on it. And if you're looking at it from a long standpoint, this is definitely one of those. It's kind of reminds me of Unity, where it has pulled back to a very similar trend line here in the past couple of days. It's held the trend line, consolidated some, and if you look, both of them are software trades. So one's application, one's infrastructure, but nonetheless, they're part of that software group. Pullback, hard pullback, held that support level, trying to bounce. Daniel Mendez asks about my opinion on the weed stocks. Yeah, I mean, they're getting destroyed. It stinks. I actually, like I was saying earlier, and I was using it more from an example for using stop losses. Sometimes what you think are going to break out doesn't necessarily do that. You got to use stop losses because it will protect you, especially in a volatile sector or a volatile industry like cannabis. It will pull back and it can really cause you a lot of problems. But right now, there's really not anything that's, I mean, you take something like MJ, for instance, right? It's just continuing to put in these lower lows and lower highs. And it's a shame, but until there's really probably a change in policy and legislation, it's not going anywhere. And in fact, it's down below this major support level right here. All right. Victor asking about CRWD as a possible short. You want to be careful about these really volatile trade setups, especially like with big tech. These stocks are high flyers. So if the market turns around, these are the stocks that are going to make some big moves potentially. Rising trend line. But from the merits of whether or not it's bullish or bearish, definitely don't mind going through it. But check this out. You got a rising trend line here that's broken. This goes all the way back to the March 2020 lows. That's broken. Okay, so let's go ahead and take that off our plate. Then you have what almost is like a triple top, right? 1, 2, and then you got this one right here. Some might say, "Hey, Ryan, that's more like a double top. Ignore this part here. You got your double top." Either way, it's definitely a topping pattern, and so. It broke down below it on the 22nd, did not bounce with the rest of the market. So, I mean, it's definitely a weak stock. And now, here's what kind of concerns me a little bit about getting short at these levels is that what is your edge at this point? It's become a little bit too obvious to get short right now. Doesn't mean that it can't keep going lower, but from a reward risk standpoint, are you really setting yourself up for success by shorting it this late in the game? What I always say is that you don't necessarily have to get in at the top of a stock. Okay, if you were to do that, then it would be like getting in at 298.48 back on November 10th. We're not trying to do that, but when you see these big topping patterns emerge, that's where you want to try to get short at when it starts to break. And then all of a sudden you're going from 241 down to sub 200, and you're sitting on some pretty good gains at that point, almost 25%. But trying to get short here after it's had an extended sell-off, I mean, MACD is very oversold. I mean, there's a potential for a dead cat bounce, and even if it doesn't happen, how much more reward are you really looking for to the downside? So I like it if you're already in it and you got into it on the early part of this break. If that's the case, then my stop loss would be probably around like 214 and seeing if it can't keep dropping even further. But to get in at this point makes it a little bit more nerve-wracking, even though it's kind of trading below this support level right here. The reason why I say kind of is because it's maybe trying to form a base, because you have the lows here and then you had a bounce, and then so far it's rallied over the last 2 days, kind of like Unity, right? And it's putting in a higher low, so maybe it's trying to push back above that 214 level. Let's see if it has any other trend. Yeah, those are really the support levels that I would be watching on that. Good stuff, Victor. Man, we got people all over the world. We got Switzerland, Romania. Nvidia gives me a headache. Should normally trigger the market crash, but holds up today again like the fangs. Yep, that's one of the things that we're seeing. We're seeing a lot of people there's a lot of people with losses right now. And instead of just saying, hey, you know what, I'm going to protect myself, I'm going to make sure that I don't get slaughtered, they're buying more. They're buying the dip relentlessly. And it, like the Omicron, for instance, that was one of the biggest surges of retail dip buying that's ever been recorded. And now all those people that bought the dip, a lot of them are probably going to be underwater because they don't usually buy the dip right at the lows. Now, Nvidia pulled back to this rising resistance level here. And see that resistance level right there? It pulled back, started back in, what was that, February of this year. So it basically acted as resistance for a long time. And then, like what we saw with a lot of big tech stocks, it broke through that resistance. And now it's got this nice rounding top here, pulling back to support. So I think in conjunction with the 50-day moving average and in conjunction with this, what used to be resistance, but now support, it's going to find some support there. AMD has a little bit of something similar working. AMD has that support level. You can see it bounced off of that as well today. So there's a little bit of a, let's buy the dip off of this old resistance level and see if we can't bounce it right back up. Maybe AMD can get back to 165. It's not the worst setup to take, but you really need the market to cooperate. And while I would probably not be opposed if we were seeing a little bit of strength in the early AM to maybe try something with Nvidia or try something with AMD, you got the FOMC coming out at 2 p.m. that can instantly wreck any kind of trade setup you take. And this is a really important one. This isn't just like a run-of-the-mill one. This is like, what are you doing about the inflation? It's running hot. Are you going to do anything to try and stop it? Thoughts on Tesla? I think at this point, it seems likely that we're going to either see a pullback to this support level here. I don't know how really strong that support level is, but I think more than likely this long-term trend line is going to get tested again. That, if I had to guess, that would be the technical target that I would have to the downside. You had this like triangle pattern here that we highlighted last time, but look at this. You know, we kind of created our own support level and then broke it. Price kept bouncing every time off of this like 988 level. Now it broke below it yesterday, followed through to the downside by just a little bit today, but nonetheless, it followed through. All right. Get a sip of water. Did the VIX improve? A little bit, okay. It actually was getting slaughtered. Trying to pull up the 5-minute here for you. It was getting slaughtered for most of the afternoon and got a little bit of a pop into the close. Keeps it above 20, actually 21. You're back below this major support level here. This is going to be resistance going forward, but look at it from this angle too. These are two declining trend lines here, intact, that was finally broken, which makes it not intact anymore. Broke to the upside, pulled back, found some support there, and bounced again, still above both of those declining trend lines. So I think the volatility is very much elevated still. We're sitting at near all-time highs, at least on the S&P 500 and NASDAQ, and we have a VIX index that's over almost 22 now. All right. I like this question that Alex asks here about SoFi. Caught a falling knife at 1450, stop loss at 13. So the question, and again, stop losses are really about your comfort level. What are you comfortable with trading? And we've obviously marked this up a lot. I'll go to a more cleaner one here. But let's see here. You caught the falling knife. Where'd you say you got in? 1450. Okay, so it's tied into 1385 to see. The thing about this, I mean, it's oversold too. I mean, it's putting up some pretty rough numbers internally, but this is going to be. It looks like this is going to be your support level right here. See that? Got some support there, maybe around 1371 or so. It gets kind of ugly. Where is this low here? This would probably be the low part of the support level. That's going to be around 1356. Am I right on that? 1356. Yeah. So definitely if it breaks below 1356, I don't like it at all. You could possibly even go a little bit higher at 1375-ish. But I mean, you can see, I mean, this thing is struggling. It's a falling knife. You got to be careful with trying to catch the falling knives. They're very, very dangerous. Very rarely will you catch it by the handle. It's usually by the blades, and it'll lead to multiple attempts before sometimes you even get it right or hope to get it right. By then you're playing with a lot less capital. This would be my support level on SoFi, 1375. All right, interesting question. You think AMC has the potential to pass GME and become the leader of the meme stocks? I don't even know what the leader is at this point, if I'm being completely honest. These things are at such high elevations, they can't sustain it long term. And you're starting to see these meme stocks rolling over. You know, there's going to be a lot of people trapped in them. And they can be fun to play, you know, as a quick swing and everything, but these people who are saying hodl and, you know, to the moon we go and we got to stick together as a team. Nobody sticks together when it comes to the stock market. You know, everybody's going to do what's in their best interest. They're not going to take a loss for somebody else. Here at this point, we got support. It's breaking down. I actually think the AMC chart probably looks worse than the GME chart. And they are similar, but I mean, this one looks like it's going back to sub 10 if I had to guess. Over the course of the next year, would not surprise me to see it at sub 10. Okay, for the long run, what is better, more profitable over time? Which do you strongly advise between day trading and or swing trading? Swing trading. Day trading, you can only capture the profits that are there for a given day. Now, in different environments, it can be very conducive. If you're starting to see these big swings to the downside, you can sometimes play those swings to the downside and not worry about the dead cat bounce the next day or the afternoon pop. But I would often say that you make more money by winning slowly than by winning fast. And the reason why I say that is that swing trading gives you the opportunity to catch much bigger moves than what you might have in a single day. And to make day trading oftentimes worth your while, you got to trade bigger position sizes because you need more from a dollar standpoint to make it, you know, worth doing. Victor asks, isn't moving stop loss a cardinal sin? Absolutely. I don't move it lower. I will move it higher. So if I buy at 100, if I buy, like, let's say Apple at, you know, let's say I bought in on this dip right here at 139 and it's going back up, I'm probably at least having my stop loss at this point at like 160. So it's okay to move the stop loss higher. You just don't want to move it lower. All right, Chris, you went all in on SoFi, man. You got to be careful with those things, man. Hey, I'm glad to have you, Alan. Thanks for joining. All right, guys. We covered a lot there. Went over a lot of your stocks. This is a difficult time in the stock market. You are seeing where the stocks are starting to really run into the issue of inflation with different variants of the COVID virus. You also got the need to start tapering. We can't keep printing money endlessly. A lot of new traders are starting to realize that for the first time in a long time. A lot of traders are starting to see volatility for the first time ever. Some of you guys have only started trading this year, and there's not been really any real pullbacks. And what we've seen so far isn't even a pullback. It's just a couple of days to the downside. The extent and the nastiness that a market can sell off and ruin a portfolio is unimaginable until you've actually experienced it. So I speak out of caution. I get that. And I know that's not always the popular thing, but the best thing that you can do is to start planning out now. If the market, continues to deteriorate, if the FOMC throws a surprise to the downside that causes people to realize they're being more hawkish than originally realized, where's my line in the sand going to be? Where am I willing to take profits at? You want to be thinking those things out. And remember, it's not all about one trade. It's not all about one investment. It's about making good, consistent trading decisions over the long term from one trade to the next. All right, guys. Glad to have you guys tuning in. It was a good chat and good live stream. Always hit me up with any questions you might have, Ryan at SharePlanner.com. Thank you, guys. God bless.